Rio Tinto today returned a record final dividend of $3.7 billion as the Anglo-Australian mining giant thanked the strength of its world-class portfolio and balance sheet for helping it through the current volatile environment. However, the FTSE 100 firm warned that it was closely monitoring the impact of the COVID-19 coronavirus and is prepared for some short-term impacts, such as supply chain issues. Read more. Glencore braced for coronavirus impact as earnings fall. The figures revenue from sales at the miner hit $43.2 billion, 7% higher than in 2018, largely as a result of higher iron ore prices, which offset lower prices for aluminium and copper. The firm made a profit after tax of $7 billion, nearly half what it made in 2018. In total, Rio Tinto announced a full-year dividend of $6.2 billion at 382 cents per share. A 24% increase on last year's return.Operating cash flow was $14.9 billion, 26% higher than in 2018. The company's debt pile stands at $3.7 billion, which Rio Tinto said was largely the result of $11.9 billion worth of cash returns to shareholders through dividends and buybacks in 2019. Why it's interesting until the start of this year, investors would have been confident about Rio Tinto's results, as the stock gained nearly 30% in 2019. Sign up to City A.M.'s Midday update newsletter, delivered to your inbox every lunchtime. However, recent weeks have seen the miner shed about 10% of the due to a coalescence of factors that have weighed down sentiment. Last week's iron ore exports downgrade, which was brought on by a halt in manufacturing activity caused by the coronavirus outbreak, is another blow for the commodity, with supply already disrupted by the recent cyclone Damien in Australia. According to RBC Capital Markets, inventories of the metal are now 42% higher on average than they have been at this time of the year. In addition, analysts have been critical of the firm's new solar farm in Australia, which is meant to reduce emissions from its Rio mine. In January, the firm posted its fourth quarter results, which saw a slight decline in production volumes. Chief Executive Jean-Sébastien Jacques attributed the decline to challenging weather conditions and operation difficulties in the first half of 2019. What Rio Tinto said commenting on this morning's results, Jacques said, "Our world-class portfolio and strong balance sheet serve us well in all market conditions, and are particularly valuable in the current volatile environment." Read more. Rio Tinto blames the weatherman as iron ore shipments slip. "We are closely monitoring the impact of the COVID-19 virus and are prepared for some short-term impacts, such as supply chain issues. Our products are currently reaching our customers. In line with our disciplined approach to capital allocation, we invested $2.6 billion in development projects, including high-return iron ore and copper." For more on this story, visit the news article link.